We're currently running a two-pronged strategy, and we'll get into those two prongs in a second. But first, we're going to talk about, the big thing at hand, what's happening tomorrow, inflation data, what we're expecting, and what happens, what matters, and how we should be reacting. So what are we expecting? We're simply expecting a very hot print, some level above expectations. Put it this way, nobody is leaking that it's going to be below expectations. The White House is not talking early and saying, hey, inflation's cooling. Hey, we're seeing signs of peak. Hey, we're past the peak, et cetera, et cetera, et cetera. They're saying, expect high inflation. Saying expect it. So what am I going to do? I'm going to expect it. I'm going to expect high inflation. I put on some additional downside bets today. Hopefully those will pay out. We'll see. They already have. I did that when we came back today. I said, I'm going to take advantage of this. I think it's a layup. If the White House is saying, expect high inflation, and more importantly, not saying, oh, inflation's peaked and taking the win on that, I'm going to play that downside. So I expect tomorrow to be a pretty rough day. Possibly, we'll see. I'm kind of going off of what I'm reading here, and people always ask me why I get so political sometimes on Twitter. Well, markets and politics are very much intertwined. So markets are good. People tend to like the current regime a little bit more. Biden's approval ratings have very strongly deteriorated into uncharted territory, as with the market and as with oil prices, which are part of the market. And Barack Obama at one point said that it was almost a perfect correlation between his approval ratings and the price of oil. So there you go. Anyways, we are expecting downside. However, we had a tremendous day today, and it wasn't just because of our hedges. It was also because of our CRISPR stocks. And if you look at ARK was up today. All major indices were down. The NASDAQ was down a lot. It wasn't like the NASDAQ, was the best performer of them by some noticeable margin. No, they all came down. But ARK, up. This is important because we're playing ARK not necessarily individually, but what it represents. True growth companies that have the potential to 10x. We are playing this sector despite expecting additional downside in the broader market. Why? Here's a couple reasons why. ARK made its bottom for the year so far, year-to-date low, on May 12th. The S&P 500 made its year-to-date low more than a month later, NASDAQ more than a month later, et cetera, et cetera, et cetera. So those continue to decline. ARK has managed to break a downtrend. I'm not saying it's all of a sudden an uptrend, but it looks like it's in some sort of recovery trend. I think the ARK lows can hold for the year, and that can kind of paint the picture on what kind of additional downside we're expecting in the S&P 500. I'm not expecting something crazy. I'm expecting some 5 to 10% additional downside. So if I'm only expecting 5 to 10% additional downside, it doesn't make sense for me to go meaningfully short and meaningfully bet. No, I put some hedges on. I stay in my longs. I did trim a little bit of the longs. I wrote call options, short-term call options out against some of the longs to just make some money on that without having to sell the stock. And we're just going to be patient. We're positioned for this. A lot depends on tomorrow. We're going to see how tomorrow plays out. It's basically out of our hands. It's happening pre-market at this point. So we're going to see what happens. We like our well-chosen individual growth tech company names. We're not buying the index. We're buying the individual ones. CRISPR stocks that are up tremendously today when all the markets across the board pretty much are down. ARK is up. There's parts of ARK I don't like, but it's up. We have to keep note of that. And we will ring the register on the hedges if we see that downside. And we'll deploy that cash into those positions that we already think the low is in for, and we're seeing evidence of that. This is evidential that ARK has bottomed, at least in theory. Time will tell if we're right. But we think there's evidence pointing to the fact that ARK has made its year-to-date low, and it has some correlation with the market. It doesn't seem to have a second new year-to-date low correlation with the market, since it's year-to-date low a month in advance of that. And we're seeing ARK up today when the market's not up today. But it might pull back a little bit with the market if we see some hot inflation data tomorrow. So I'm looking at ARK to get in around 38, 39. That might be a little higher than the level it needs to go to stay within that trend. But that is kind of the point that I'm not going to necessarily buy ARK, but I'm going to add to growth companies that I like that are down tremendously. And some others. I'm not afraid to buy something with Cleveland Cliffs to add a little bit to that today. Pre-market with low order. Bought some Barrick Gold. I just feel like it's, obviously it's been hard to play gold recently. Came back into that. If the energy companies continue to fall back, I'll buy some. So it's not just growth, but we like it. We like growth, and we're seeing signs that growth has already put in real growth. We're not talking about mega cap tech, that growth. We're talking about 10x growth. We're seeing signs that bottom is in, and a recovery trend for these long duration assets is in place because there are buyers who are willing to look out into the future. At the end of the day, at this point, everyone's playing a downside trade. Sure, maybe some people in the past couple days have decided to capitulate and say upside trade, but it seems like for the last month or two, the people buying these stocks are longer term holders. So that's a good thing, I think. We'll see what happens. That's today's video. And until next time, peace out.